Hey traders, checking in on the stock market today. Not much going on in the S&P 500 as a whole, but you can definitely see money leaving some sectors and money entering other sectors, and that is something to pay attention to in the short term. Let's see what it looks like on the charts. So starting off with the S&P 500 futures chart on the 4-hour time frame. So last week we ended with a tightening range. That tightening range ended up breaking bullish to new all-time highs. So I am looking at anything over 38.95.70 here. Let's use a straight line. Anything over that is a higher low. So I am anticipating the bulls will most likely be able to form a higher low compared to that level, but the size of the pullback currently is already significant enough that we will be watching for a 4-hour lower high compared to the all-time high to be a result of that bounce. So that's going to make for an interesting second half of this week. I guess we've only got 4 trading days this week, so interesting end of this week as we watch to see, number one, do we set a 4-hour high or low? Do we set that lower high? And then can the bears confirm a 4-hour downtrend? If the answer is no, then we will end the week with the bulls keeping complete control. And even on this pullback, the bulls are just fine because as we know, all of our major sectors need to be dropping at the same time if we're going to see significant bear follow through in the broader market. And we're about to look at where money is going to help the market bulls stay confident. So IWM, gap up open this morning, but profit taking most of the day, looking at the low 223.42. If that level breaks, I'll essentially just call it a failed bull flag, but I still will be viewing it as a daily uptrend and we'll look for a higher low compared to 204.84. I never like when inside bars break on gaps. I play inside bars breaking all the time on all time frames, but if it's with a gap on the open, I will throw it out the window. I can have that as a main play that I'm watching. GME is a daily inside bar heading into tomorrow. So I already know I'm watching GME tomorrow because it's a very tight range and I'm watching for volatility to pick up again. If we gap up or gap down, that play goes in the trash instantly because the setup did not come to me and I am not going to be chasing a gap looking to play the inside bar break. It has to happen during regular trading hours. So IWM, failing a daily bull flag at the moment, but also still holding a low of consolidation. So I would still call it a possible bull flag still alive as long as 230, make that 223.42 holds. QQQ. So QQQ the past few days hasn't had a ton of confidence. It's definitely been bullish, but we had a red day and a pretty decent drop back to end last week on, what was that, Wednesday? Then we had an inside bar on Thursday, not much going on. Friday definitely controlled by the bulls, but today ended up being a red day after a new all-time high. Just a little bit of profit taking. We're in a position, and let's just look at XLF. Clearly, XLF is seeing an influx of capital. It's a cup and handle. So we had this pullback. We failed to break the all-time high of 31.62. We then bull flagged. And to confirm the cup and handle, you need to break both resistance levels and you need to see increasing bull volume. Well, we did that. Our new daily high or low is 30.99. We got the bull break of 31.62 and we are at new all-time highs. So essentially, I just view the market as a tag team wrestling match. And right now we have the healthcare sector, very weak today, dropped down 1% red, but the financial sector was 1.7% green. And essentially, the healthcare sector bulls, which were definitely present Friday, tagged in the financial sector bulls to hold down the fort today. And that's what they did. The S&P 500 was essentially flat because you have some sectors dropping notably and some sectors increasing notably, which keeps the boat from rocking too much. So for XLF, all-time highs, lack of resistance, 32.21. Bulls want to keep up that volume, and we'll see how far they can run with it. So the healthcare sector had this tightening daily equilibrium and it broke bull on Friday. And here we are with a big red day today. 117.47 was the top here. We broke that today by 7 pennies, but obviously no follow through. And here we are right back in the middle of this range. So I'm looking at anything over 114.62 as a daily high or low, but it's possible this is a weekly lower high. And if we were to drop down and break 114.05, we could say that we are then confirming a weekly downtrend and we would be losing the weekly EMA 12 support for the first time in 3 months. So that is a key 114 level. And again, no major red flags, But if we start to see this bearish action and the bear volume continue, it's all about that 114 level and that weekly EMA 12 support. Biotech sector, looking bullish on this tomorrow. And that's just because we're getting a bit overextended to the downside. The last daily higher low was 148.88, so anything above that is another higher low. We didn't establish a ton of support on the way up. It was the strongest sector past couple weeks, and now it's the weakest sector over the past 5 days, and we are getting pretty beat up. 4-hour oversold RSI on watch. I'd love a gap down tomorrow. I would definitely be looking to buy a gap down for a bounce. If the 4-hour and the hourly RSI are oversold, we know we're looking for a daily higher low. And size of the pullback is significant enough that once we do bounce, we will just be looking for a daily lower high to be the result of that bounce. And then again, the size of that bounce would then determine the most likely scenario. Is it most likely that we confirm a downtrend for the bears, or is the bounce significant enough that the most likely scenario is an equilibrium and tightening up? Due to the size of the pullback, we already know it is a less likely scenario to see continuation, at least initially. Semiconductor, new all-time high as well. Gap up open. Definitely one of the stronger sectors in the short term. Tons of space for a daily higher low to form. Blue sky breakout, and NVDA certainly benefiting from it in the recent past. This 560 break really turned on the jets for the NVDA bulls, and then getting over 589 sealed the deal, and they are enjoying blue sky breakout after a long time, relatively speaking, of course, of just sideways trading on the monthly chart. So really nice for the bulls to finally get followed through. It got frustrating there. Look at all this choppy action. Bull break, big drop, double top, big drop into a bear break with no bear follow through, and then the bulls were gone. Tan, so the solar sector, 126, most important resistance in the short term. We topped out at 125. Anything above 113.40 is a daily higher low. So the bulls are looking to maintain the daily uptrend. We would have to fail 126 and drop down and break 106.81 if we were going to see red flags on the longer term time frame. So you never want to see a double top rejection, but as long as the daily uptrend remains, that double top rejection is not as concerning. Lose the daily uptrend, it becomes a lot more concerning. MSOs for the US marijuana space, daily higher low has been set now at 50.50. And if the bears were going to get any follow through, we would have to see a lower high compared to 55.91 and then a bear break of 50.50 to confirm the daily downtrend and confirm further weekly consolidation. But in my opinion, that's not going to happen unless the S&P 500 were to drop notably this week. If it doesn't, if the S&P 500 grinds higher, this is definitely one of the sectors that have a lot of catalysts in the potential short term, and that keeps people holding and that keeps people buying dips. And really, it takes broader market fear to shake that confidence in the short term. So the VIX, we're pretty much trading. This is the 4-hour time frame. We're trading within the range of Wednesday. So last Wednesday, we had a very volatile day, and we hit a bottom of 1970, a top of 2390. And we've been trading within that range now for the last few days. We held 1970. We're rejecting from resistance. And I know it's not resistance, but pretty much range bound with no sign of the bulls getting any follow through. So certainly keeping an eye out for it. But for the time being, really all we care about in the short term is, are we going to break 1970? Or are we going to break 2390 first? The dollar getting a bit wonky over the past couple of days, so I'm going back to the weekly time frame. This is all I care about. Can the bulls confirm a weekly trend change by holding 89.20 and breaking 91.60 for the first time? That would be the first weekly trend change we've seen with a higher low and higher high since pretty much a year and a half ago. So that is what I'm paying attention to. I get questions every time I talk about watching for the potential of a dollar bull move, where they say, you know, what would make the dollar go up? Everybody is talking about the bearish environment and all the money printing and stimulus and all this, and that's exactly it. Everybody's talking about it. It's been the trade for the last bunch of months, and you get to the point where everybody is on one side of the boat, and it doesn't take much to just tilt the scales and see a notable shift. So that is what we're watching for. and it's the weekly time frame that I care about now. I don't care about the day-to-day. The day-to-day of the dollar is not having a huge impact on the assets that I care about tracking. So onto the weekly chart to see if the bulls are able to confirm that trend change or not. Gold is still extremely weak. We had a notable daily bounce, but we knew we were just looking for the daily lower high, anything under 1875. And here we are looking right back at the low of 1785. There is a potential bottom fishing play down with these supports, but if we break 1785 and 1764, we are then in a monthly downtrend. And that is a very different spot to be in as a bull. The best place to be in as a bull is in a monthly, weekly, and daily uptrend. As soon as you are in a monthly downtrend, you then have to be watching for weekly bounces to just be setting lower highs, monthly bounces to just be setting lower highs. It's a very different standpoint to be in, and it would also be the first loss of the exponential 12-period moving average in 2 years and some change. I will be all out of anything except for physical if we see a bear break of 1764. And again, we would have to hold that 1785 level and break 1855 if we were going to see any kind of shift on this daily time frame, because every bounce is just giving us lower highs. Silver is very different still. It's in a daily uptrend. Anything above 2670 is a daily high or low, and we are technically holding that daily uptrend. It's a very different standpoint to be in, and it feels like every week we're just seeing gold and silver separate themselves more and more from each other. Silver needs a 20% drop to break monthly low consolidation, whereas gold needs 2%. That is a massive difference. XAU, XAG is all bear, showing us that silver continues to outperform gold. Miners, GDXJ, we're still watching this equilibrium that we were watching last week. Low, high of the bounce, higher low, lower high, and now we're scouting a higher low, anything above 48.28. We would have to see the gold bulls bounce. Even though this is GDXJ, we would need to see the gold bulls bounce and help out if we're going to hold 48.28. Potential bottom fishing play approaching, and we would then be watching for a lower high compared to 51.64. 3 more trading days this week. It is possible that we need to wait 1 more week before we do get a break of this tightening daily range. Oil is still all bulls. Daily bull flag confirmed. New benchmark is now 57.41. Anything above that level keeps the bulls in complete control. And we are looking at the next resistance level. Now that we broke 57.41, there is a level at 64.56 in the short term, and then 67.56 as 2 levels to be watching. So overhead resistance, not necessarily in play in the short term, but these daily uptrends, it has been very strong, and it's staying that way. We've seen a ton of bull momentum ever since the Saudis announced that they were dropping supply, and really the bears have been non-existent since that headline. Natural gas got its bull break. Daily uptrend remaining intact. Higher low was 2736. We held that by less than 1 penny. Really nice bottom fishing play. And here we are breaking bullish, and we are now in a monthly, weekly, and daily uptrend. So breaking 310 is notable. The next resistance level after 310, we're looking back at 3436. So we'll just call it 344 from here. So a lack of resistance, tons of space for a weekly higher low, decent amount of space for a daily higher low, and currently seeing some healthy consolidation, hourly equilibrium shaping up in the short term. So did some APHA trading today. Lots of volatility in the MJ sector still. We're just looking for a standard, good old-fashioned equilibrium. Blow off top, massive drop, big time bounce. Don't have anything that rhymes with bounce. We're looking for a lower high compared to 32.29 and an equilibrium, because we know equilibriums are the most likely scenario after significant volatility. And that is what we have. So I'm going to end it here with some thoughts from the end of the crypto video. I don't have my thumb drive for any Iceland video today, but I'll be back at my home base soon, recovering and almost back to 100%. But I'll see you tomorrow regardless. So I went to Mexico for a few days, got sick literally day 1. Fortunately not COVID, was very careful about all that stuff, but it was a reminder for me because I have been working 7 days a week for 5.5 years at this point and just wearing my body into the ground. And this was a vacation where I was going to take time off of work, but I was going to be drinking every day out on the beach and doing all that stuff. And my body said, nope, you're going to detox, you're going to lay in bed, you're not going to do much of anything. And it really was just my body ensuring that it was a totalitarian break, not just, a break from looking at the screens, but my whole body needed a break from essentially just working too much. So pay attention to yourself, your psychology, check in with yourself, your physical, what is your body telling you? What is your psychology telling you? Observe it from a third-party perspective, and you can gain a lot of insight because your body is constantly trying to tell you things, and it's up to you to initiate the communication channels between your brain and your body to be able to understand them. Western medicine sometimes does not help with that. You get a rash consistently and you go and they give you steroid cream. I want to know what's causing that rash. Is it a food that I'm eating? Most often, that's probably the answer. So it's up to you to be very observant and establish those communication channels. I hope you are well. Don't forget to do good things out there, and we will certainly see you soon.